Henry, if I start with you, just take us through what's been happening to public debt in advanced economies.
It's at a really historical high. Across advanced economies, it's higher than it's been at any time since the Napoleonic War. Why has this happened? It's happened for a few reasons. One is that in recent years we've had, or recent decades, I should say, we've had a series of crises: the global financial crisis, the COVID-19 pandemic, the energy crisis in Europe, which has led to sort of step changes in public debt. But it's also because politicians just seem addicted to big deficits. They really struggle at the moment to balance spending and taxes. And so it continues to mount up. And that's got more fundamental political causes, if you like.
I think the sort of fascinating thing being here is how much of you could call it a studied indifference there is. It's the elephant in the room. Nobody wants to look straight into the sun and engage with this directly. I think there's a bit of triumphalism to some degree. The US recoveries from the global financial crisis and from the COVID pandemic were substantially stronger than most developed economies. And there's a sort of vibe, a sort of idea that American growth will sort of rescue the country from these things to the extent that people want to talk about them at all. There is, I would say, very little energy on either side of the political divide for seriously looking at the deficit and the public debt and looking at ways that it might be resolved.
If you go back, and this is true across advanced economies, if you go back and look at the debt that was projected, inevitably the debt ends up higher. That's partly because these budget forecasters aren't looking at whether there's going to be a pandemic, for instance, or the outbreak of war. That's not part of budget forecast, but it's also because in some cases, for example, in Britain, there's just been too much optimism about productivity growth. So you have this overall picture of high debts, high deficits, pressure on the public finances. You've got aging populations, which mean more spending on healthcare and on pensions. You've got the pressure, especially in Europe, to spend more on defense. You've got the green transition. And it's not just that debts are high. Interest rates since the pandemic have gone up a lot. So more and more spending's going on interest payments as well. So you have this upward pressure on debt. And then you get to the fact that even if you do write down a forecast incorporating all those things, you're probably, if history is any guide, being too optimistic about where debt is heading. So you put that all together and it is quite an alarming picture. Japan showed for a long time that you can have high debt and low interest rates. If we go back to a low rate world, you can have high debt again. But what high debt means is that you're vulnerable, because the higher your debt, the smaller the increase in interest rates needed for you to suddenly have a really bad problem and to all of a sudden face a choice between economic crisis or doing quite deep austerity and quite deep adjustments. Even if you can get to a situation that looks stable, the higher your debts, the more easy it is for things to suddenly become unstable when circumstances and especially global interest rates change.
So a more conventional way, possibly, is to raise revenue, is for governments to raise more revenue or to shrink their spending. And what are the prospects for taxes to go up in the rich world, do you think, Henry?
Basically varies by geography. If the United States wanted to correct course fiscally with taxes tomorrow, it could do it. And actually, in a speech by Greg Mankiw, who's a Harvard economist recently, I think he has some line where he says, if you wanted to fix this problem over the weekend, you could. The US has no value-added tax. It's the value-added tax, which lots of European states have, is quite a low impact tax on the economy. And you can raise a lot of money with it. And traditionally, Republicans in the US have opposed that tax precisely because it's such an easy way to raise money and make the government bigger. But America's taxes are low enough that they could do that. But the political will isn't there to do it. And then you have a kind of range. Japan is kind of between Europe and the US. In Britain, there's a lot of talk about taxes being at historical highs, which is true. But Britain has been on the low end of the European range historically. But another thing to remember is the higher your taxes are, the more important it is that they're well-designed taxes. And if we're going to go into a populist moment where your tax system is going to be, wealth taxes and all kind, you're not going to pay heed to economic efficiency and to growth arguments, then you might do damage at lower levels of taxes as well. So I'm not optimistic, basically, about solving the problem through tax.
The problem is that cutting spending is going to be very difficult as well. You've got pressures, as Henry, you were talking about, you've got pressures on the budget from defence spending, from the need to decarbonise, And those pressures are even stronger in Europe, which has to really up its defense budgets to match new NATO commitments. And then on top of that, you've got an aging population, which means a bigger pension bill, and which also means that it's quite hard to win support for any cuts to benefits. And I think we have a chart which illustrates this. Here we go. And this is a chart that shows federal spending in America, but the picture is broadly the same in other rich countries. And you see that about 2/5 of spending goes on age-related benefits. And defense here is not growing in America as a share of total spending, but it will be in Europe. So the pressures on the budget are large, and the political will possibly to shrink it is hard to imagine. What do you agree with that, Henry?
Yes. I love this chart because it basically shows how the purpose of government has almost completely changed in half a century. When government starts, it's about national defense. And in that other category, you have infrastructure spending, for instance, another thing people complain about being too low. Then gradually, over time, the government sort of turns into this insurance company that provides old age benefits, and there's a little bit of Medicaid in there growing, you can see as well, which is health insurance for the poor, which you might also put in the entitlement bucket. And why does that happen? Well, it happens in conjunction with the aging population because you have more elderly people. The retirement age doesn't go up in line with life expectancy for a long time. And also the political power of an aging population is very great. In the mid-20th century, when the welfare states got going, people said, they will be captured by populists at the ballot box. But people like Milton Friedman, had this concern that you'd have a kind of populist coalition of the middle classes voting themselves benefits. No one really saw that what you would have is this elderly electorate making it impossible to cut pension spending. But that's what you've got. So it's just very, very difficult to see how politicians can resist that pressure. But then look at the rest of the budget. What else is there to cut, really? There isn't much less. So again, I'm Mr. Pessimist over here. I find it difficult to see the spending adjustment too.